Today, instead of looking at market data in terms of pricing or different communities in Calgary, what we're going to do is take a look at the rental rates. And I've made several videos about this over the last 1 year where I noticed the rental prices already crashing. And when I say crashing, they just significantly changed to where they were in the last 1 or 2 years. When I posted those videos last year, a lot of people commented that I didn't know what I was talking about. They didn't experience any sort of drop in their rents. And in fact, they were seeing their rents climb. And that's another reason why I want to make these videos, because it is important to understand that the rental market, just as the buy and sale resale market for real estate, is as nuanced. When I say that, it's just we have so many different types of segments in the rental market. So for example, you can have the turnover rents versus non-turnover rents. Those two are very different factors. When one of them starts changing, they indicate two very different things. Similarly, the vacancy rate. We have vacancy rates, for example, your purpose-built rentals, but then we also have vacancy rates for regular people who just invest in properties and rent them out. So those two are very different things. We're going to break it down together across Canada, see what different provinces are experiencing, where they are headed, where the trends are, what the acceleration rate is on the amount of rents dropping, and what that's going to mean for the real estate market. The rental rates is something that a lot of people don't talk about, especially realtors. They primarily just focus on market dynamics in terms of supply and demand, but it is extremely important to understand that something as crucial as rental rates can also have a very dramatic effect and are often early indicators of what's going to happen in the market going forward. And the reason for this is because it dictates what happens in terms of investor sentiment. So for example, if the rates are dropping and the cap rates are now significantly different from what was promised previously, or what we had recently with the CMHC multiplex building across all of Calgary, and now them taking away the RCG rezoning later this year, but the cap rates are already dropping. And a lot of performers that I examined with investors last year, they were being sold cap rates that was set to increase every single year. The rents were supposed to go up by 3-4% year over year for the next 5 years. All of this while rents were declining. So you can see why it is very important to understand this data, apply it to what investments you're getting into, or even understand if you already own investment properties, what you can do with them. Two very clear trends right now that I am seeing in the market is a lot of people shifting from long-term rentals because of the high vacancy rate into short-term rentals. So there's an increase in short-term licenses, and with the recent regulations that's gone into effect, now the licensing is very different in terms of the amount of fees that you have to pay, the type of whether it's your primary residence or a secondary unit, the renewal process, the fire safety, everything is dramatically different. So I would highly advise, if you're looking to get into the short-term rental market or want to buy an Airbnb, definitely check out this video right here. I'm going to put a link to it, and that's the video you want to look at. If you're sticking with long-term rental, or you are a renter in Calgary and you want to understand what's going to happen with the rentals going forward, then this video is extremely important because it gives you the bargaining power to talk with your landlord and understand where you stand in this market. Now, the second biggest trend that I am seeing right now is a shift away from apartments, because apartments had a huge run up in the last 2 or 3 years. However, a big downside with apartments is most of them don't allow short-term rentals. Even for the ones that do allow short-term rentals, they generally change their guidelines over the years as more and more complaints come in. And so that is highly volatile, and it's not something that you can depend on. And that's why you have to run your numbers still as long-term rental for a backup. Now, the reason I'm saying there's a change in trend, because more and more people want to go towards single family homes or properties that they have freehold control over, and they can dictate what their Airbnb terms are. Ideally, a lot of people are going now for legal basement suites, especially in the south and southeast. And those are communities that are always have really good booking rates when it comes to Airbnb. People are shifting away from trying to go for the lower end properties such as apartments and townhomes, even though those are easy to get into. It was easy to make sense of the cap rates, but considering where their prices have risen recently, a lot of people are now heading back towards duplex or detached homes as an Airbnb investment. So let's get started by taking a look at the report that came out in January 2026 by Rentals.ca. As you can see, in majority of the provinces and cities across Canada, we've seen a dramatic drop in rates. Leading the charts is, of course, Vancouver with a negative 7.5% year over year. Now, Calgary has dropped by 5.4%. The average national rent right now sits at $2,060. Looking at the executive summary right here, you can see the average asking rent in Canada fell to $2,060, and that's down 2.3% year over year, and it's the lowest levels in 2.5 years. Rents have declined now for 15 straight months, ending 2025, down 5.4% over the last 2 years, but it is still 14.1% above the December 2019 levels. And this is where it is extremely important to understand. If you've been in that exact same rental without using the competition of the market to find better deals, you could potentially be still paying more than you're supposed to, because by local law, they are allowed to increase your rents year over year. However, if they have not calibrated to where the market rents are, you might be paying more. And so it's important to understand and see where the market rents are right now. As far as purpose-built rentals go, they are actually the most stable. So purpose-built rentals are the most stubborn when it comes to reducing prices. Those are essentially where entire building is up for rent by a central company versus individual apartments for rent by investors. And those are only down 1% annually because they can generally afford a much higher vacancy rate balanced across all the apartments they own. So while 3-bedroom purpose-built rentals actually rose by 2.9% to 2,741. And now this is a very interesting stat or reason of why 3 bedrooms are performing significantly different compared to other property types, and I'm going to get into that. BC, Ontario, and Alberta led provincial rent declines, while Saskatchewan actually posted the strongest growth, which is up 7.1% year over year. So that province is actually seeing a lot of people move there as compared to the amount of supply available. Vancouver and Toronto rents hit their lowest levels since early 2022, while Edmonton was the only major city to post rent growth. So what we are seeing across Canada, and that's why Calgary went up in terms of resale prices over the last 3 years, is people are chasing affordability. And generally the price delta between Edmonton and Calgary is about 14%. Because Calgary went up so much, it almost touched about 19 to 20%. And that breaks the cap rates and everything. So people now start finding Calgary a little bit less affordable relatively. It's still way more affordable compared to the rest of Canada as far as purchase price goes, but now because people have that substitution effect and they're not willing to pay that 20% markup to be in Calgary, then a lot of people start moving to the second best, which is now Edmonton. So a lot of people start moving to Edmonton, and then that drives up the rent, drives up investor interest. So you're going to see a lot of investors then next flock into Edmonton. Then that's going to drive up the house prices because now you have more competition. It's already driving up the house prices, but it's going to go up more. And then after that, you're going to have, so those are the cycles. So that's why these are good early indicators to understand what the market behavior is. Now, looking at the average rent by city and city unit type. So top Canadian markets, not Vancouver, you can see it's about 2,974. Vancouver, 2,664. I'm not going to go through all of these individually. There are a lot of cities on here. I'm going to go over the ones that I think are really important to compare, especially comparing apples to apples in general sense, at least the top 3-4 cities around Canada. Toronto is 2,503, and that's the total average. So you can see the 2-bedroom here, 1-bedroom and 2-bedroom. And of course, I'm going to put a link to this entire report so that you can browse through it at your own speed and examine the numbers a bit more closely. And when you can see Mississauga is at 2,436 for rent, and then you got Burlington at 2,341. Now let's try and see if we can find Calgary. I believe Calgary is on the 3rd page. Right over here, you can see Waterloo, the student city, is at 2,202. which is still relatively a lot better. And it's month over month, it's gone up 0.5%, but year over year, it's also actually gone up 0.5%. What's gone down is actually the 2 bedrooms. So multiple people sharing the same 2-bedroom apartment, a lot of people moving out in terms of tech. And then you can, of course, check out the other cities if you wanted to. But here's Calgary. So Calgary now sits at an average of 1,875. That is about 0.5% drop month over month. So for a 1-bed, we're sitting at 1,532. Year over year, we've actually dropped by 4.6%. As far as 2 bedrooms go, we have dropped by 0.7%, and year over year is dropped by 4.4%. So that is a very interesting stat, high level to know per city how different cities are performing. And going on to the national overview. So this is just by segment type. So right here you can see the apartment is at 2,049. So 0 bedrooms, 1,500, 1,800. And then what is interesting, let me see if this one shows it. Okay, so you can read all these rents if you wanted to. What I'm going to do is go over to the year over year change to understand where the percentage differences are happening. And one of the things you'll notice for the condominiums, if you look at the 3 bedroom, so the 3 bedrooms have gone up dramatically at 4.1%, in contrast to everything else. So you have the studio apartments, which is for a single person, have gone up 3.3%, and this has gone up 4.1%. Now you might be asking, why is this, and why are those behaving differently? Because normally 3 bedrooms used to not be as popular. At that point, you'd rather just get a freehold home, unless this is something in, for example, downtown Vancouver or Toronto. So one of the reasons we are seeing this happen, and this is from another article that we read a couple months back, is because of the affordable crisis that we are having right now. A lot of people are going back to either living with their parents or sharing apartments. So now people are preferring to get a 3-bedroom apartment and split the rooms out so 3 people can stay in that one apartment instead of one person paying for everything. And that averages out to be way lesser per person than what you would pay for something else. Because if you look at the rents here, it's 2,200 and then 2,800. So you'd rather get that larger space together with someone, or if you're a single person, then you'd go for a studio, and people are moving away from that 1 bedroom because it's still, even though at 1,923, it's still not affordable. So right now, a lot of what is determining where the market stats and data is headed for rentals is based on affordability. Before we continue, I just want to thank everyone that's been on this journey with me so far and have found my YouTube channel extremely insightful. It's amazing when I come across someone just organically out there and they recognize me, or someone who's just been following my channel for a while and then become a client. Those are some of the best conversations that I have because they already have background context into the kind of things and data that I'm so interested in. And then we have the most amazing conversations. And so now what I want to ask of you guys is let me know what you would like to see on this channel. This year, I'm taking this channel to another level. We're going to expand out to a lot of other things. We're going to do pre-construction property tours. That did really well when I put it out in December. I actually had a couple people reach out, ask for more information. It does not get as much views as these other videos, but views don't matter as long as there's impact. And so I'm going to do pre-construction property tours, general property tours, and the best of all, I'm coming up with an entire pipeline to do community tours. And we have 200 plus communities in Calgary. And I'm going to do a community tour for every one of them. So there's huge amounts of content coming out. Make sure you stay tuned, but I'd also like to get an idea where you guys would find the most help as far as the type of data or content that I put out. What questions do you have on mind? What are you curious about? What can I research for you and explain right here on this YouTube channel? I would absolutely love your input. It would change how this channel can impact everybody else in the market. There's so many other people. If you think you are the only person with that question, I promise you, you're not. The amount of times we see the exact same question come from so many different people is absolutely crazy. And so definitely put it out in the comments there. I'm going to take a note of every single one. I would love that feedback. Every single piece of feedback is relevant, I promise you that. Let's get back right into the video. So now rents in Canada is the lowest in 2.5 years. Canada ended the year at 2,060, as we discussed before, 15 consent. These are all the same stats from before. Rents have risen by a total of 2.8% over the past 3 years. So because they went up so much and they are correcting over the last, I would say, 2 years, but relative to where we were 3 years ago, we are still up and we're 14% higher than what they were in 2019. So that is why there is such a split experience based on the type of rental that you have. If you are comparing to where affordability was in 2019, or if you stayed in the same place for a long period of time and you've just got nominal increases, but you've not adjusted back to where the market is, then potentially you are experiencing higher rents. But also if you have in the recent 2-3 years switched around apartments and then that's your point of comparison, then you would have experienced a drop in rents, and so you're thinking rents is coming down. So there's a lot of different factors depending on your personal experience. December has marked actually the slowest month for rental growth in 2 years, capping off 5 straight months of decline prospect counts since the July peak. And while the demand remains below levels from recent years, a seasonal improvement is anticipated to begin in January. Moving through 2026, affordability challenges, reduced mobility, and slower in-migration will continue to shape renter behavior. And this paints a very clear picture of where we are. So relative to 2019, as you can see, obviously the rents are higher, but we are obviously been in a decline also since 2023 and heading down. Year over year change in apartment asking price. So this is purely from a percentage perspective, year over year per month. And all the dark blues are December. So you can see in December where we are generally, and this is what's happened over the last 2 years. So the problem is we went up so much during this period of time, these 2 years, that it has created a lot of bad investments, bad actors, people taking advantage of the market, but also renters getting stuck and priced out of the market. Because when rents go up, cap rates go up, investment property prices go up. And so people start getting priced out of the market, renters get confused, they don't know whether they should buy. And now we're seeing the reversal happen. However, you can see the reversal pales in comparison to how much we increased in the previous 2.5 years. Now, annual rent decline in 2025 was larger during the pandemic. So when measured as an annual average over the entire year, asking rents has actually decreased by 3.1% in 2025, surpassing the annual decrease of 2.4% in 2020 and then 1.6% in 2021. Now, rents experienced downward pressure in 2005 due to affordability constraints following strong rent increases. So there's only so much you can increase before there's just not enough and people can't really afford those rents anymore. And then it's just market cycles. But at the same time, we have seen dramatic changes in the demographic and like the population changes. So that is also something that we are going to highlight in a little bit. As you can see here, this is just the annual change in price averaged for the entire year. And you can tell 2025 essentially saw a decline of 3.1%. Now, as far as the secondary markets go, asking rents in Canada continue to experience, and the condo rents have been down 4.4% annually to an average of 2,100. 5% for freehold properties down to 2,000. Purpose-built apartments have actually seen just a 1% annual decline. Now, 3 bedrooms rise marginally. So rents for 1 bedroom decreased, 2 bedrooms to an average of this, and then nearly twice the 1.6 annual decrease for 2 bedroom rents. However, the largest and most expensive rentals, represented by 4 bedroom plus units, also experienced a 3.1% annual rent decrease. So 4 bedroom becomes just too expensive to do the numbers of what I'm telling you, and it's just too much overhead. But generally 3 bedrooms, you can manage 2 additional roommates to stay with you and manage the numbers. Meanwhile, rents edged up slightly, 0.2% from last year for 3 bedroom units. And as you can see, our average asking rent and the annual change in property type. Average asking rent, annual change by bedroom type. So here you can see everything else has gone down, but only 3 bedrooms has gone up slightly. Now, as far as studio condo rents, they've actually dropped 11%. So purpose-built apartment rents for 3 bedroom units continue to rise. Studio purpose-built rentals also showed some growth over the last year, so 0.5%. Condo rents declined annually for each type, with the largest drop actually in studio for minus 11%. So most people are going towards that purpose-built rental. They are still seeing demand. However, the condo rents have declined. Now, taking a look at things on a provincial level, you can see the average rent year over year by Canadian province. So as far as Alberta goes, you can see here year the percentage changes, overall average, and then you can see by the type. So across Alberta, all have seen a decline except for 0 bedroom. And then when you go here, as far as Ontario, and let's specifically take a look at BC and Ontario. So BC is row 3 and Ontario is row after that. So Ontario, you can see minus 5.8% and declines across all property types, the least being in 0 bedroom. As far as BC goes, you're seeing sort of a similar picture, close to minus 3.9%. However, their 0 bedroom has seen a dramatic drop compared to this, but then also all their other percentages are quite a bit higher, especially the 1 bedroom, and then the 3 bedroom has seen very little shift. So that's where you might be seeing more of an adoption of what I'm talking about with the 3 bedrooms. Now, BC and Ontario apartment rents fall 10% in 2 years. So average asking rent for purpose-built rentals and condominium apartments has declined year over year. BC down minus 5.4%. Alberta has been down minus 2.7%. Quebec minus 1.9%. So this is the average asking rent. Now, apartments rents did drop 9.8% and 9.7% respectively across the last 2 years. So that's per year. Saskatchewan continued to lead the growth in Canada, with apartments rents rising 7.1% over the past year and by a total of 16.3% over the last 3 years. So that's pretty crazy. So Saskatchewan were actually 32% below the national average in terms of affordability, and that is their massive advantage. Now, as far as looking at annual change in average asking rent by province, so you can see per province, you can see each year, year 1, year 2, year 3. Of course, I'm going to put the links in the description so you can check this out to understand the detailed trends per province. 3-bedroom apartment rents rise in 4 provinces. So 3-bedroom apartment rents actually rose in Alberta, Saskatchewan, Quebec, and Ontario. In BC, average rent actually fell for most 2-bedroom units, while 1-bedroom units saw the steepest declines in Ontario, down 5.3%, and Alberta was down 4%. As far as the municipal-based overview, you can see here annual rents decreases. So apartments were down 13% in Vancouver, 12% in Toronto over the past 2 years. Annual rent decreases for apartments within Canada's 6 largest markets remain steepest in Vancouver. Then after that, you got Toronto at 5.1, Calgary at 5, and milder rent declines were reported in Montreal. A lot of people are moving to Montreal. The market did well in terms of the property types, so you potentially have higher demand and not as much room for it to necessarily correct back down. The Ottawa market saw a drop of 0.5% and Edmonton turned positive. Edmonton led Canada's largest markets for rent growth over the past 3 years with a 17.4% increase, followed by Montreal with a 7.5%. Now, right over here, you can actually tell right here how the trends have been over the past 3 years. And you can see the trend lines for where Vancouver starts turning down, where Toronto starts turning down, and Calgary actually also started turning down right around the same time. A lot slower in terms of the decline. How Vancouver saw the fastest, and that also reflected in their property prices, the amount of investors backing out, leaving the province. A lot of issues right now with investments there. So those 3 have seen a very similar trend. And as far as Edmonton, you can see right around that time, people go towards affordability. So the rents started going up. This is 3-bedroom apartment rents in Edmonton, Ottawa. And again, it repeats some of the previous data, but also goes more in detail. So I'm just going to skip this. Check it out in the description if you're interested. This is very, very interesting. Lowest and highest price cities averaged from $1,200 to $3,000. So outside Canada's 6 largest markets, which the top 25 most expensive markets according to the average apartment rents in December included 14 cities in Ontario. Out of the 25, 14 of the most expensive are actually in Ontario, 6 are in BC, and 3 are in Quebec, and 2 were in Nova Scotia. The top 4 were all located in BC, North Vancouver, Richmond, Coquitlam, and Burnaby. Now, Ontario's highest apartment rents were in North York and Oakville and Westmount. So what's interesting here is the affordability side of things. So 10 of the most affordable cities in Canada, according to the average asking rents, were the Prairie provinces, with 4 of them. So 4 out of 10 were in Alberta. You have Lloydminster, Fort McMurray, and you have a lot of investors actually going here right now because of the cap rates. Medicine Hat and Grande Prairie. Grande Prairie has also seen a lot of people move there in the recent years. It has grown dramatically in terms of amenities, and you might have a different picture of it if you've not kept up to date to what's happening in Grande Prairie. And Saskatchewan markets of Regina and Saskatoon rank 5th and 7th respectively, while Quebec City, I'm not going to try to say this, in Quebec rank 8th and 10th. The most affordable markets for apartment rents in Ontario were actually Sarnia, Rutland, and Windsor. Not sure you want to go to any of those cities. This is a really good graph to see the most expensive, and then right here you can see the cheaper ones. So if you feel like checking these out and going through the cities depending on which city you live in right now and where you're looking to move, feel free to pause the screen, take a look at it, and of course links in the description. So BC and Ontario include mix of the fastest and slowest growing markets. Kingston continues to lead all cities in Canada for apartment growth in December, with rents rising 20.3%, largely due to an increase of listings within higher priced newly completed projects, so a lot of development happening there. And BC and Ontario included a mix of cities represented among the fastest and slowest growing markets. Finally, taking a look at shared accommodation rents have also been falling to a nearly 3-year low. Asking rents for shared accommodations in BC, Alberta, Ontario, and Quebec averaged to about $902 in December, representing a 34-month low. That's crazy. That's a long time for the rents to constantly keep declining. Average rents fell nearly 13th consecutive month, declining a year ago and compared to 2 years earlier. Shared accommodation rents fell over the past year, with each province tracked. BC led all provinces with a 9.6% annual decline, and closely followed by Ontario at 9.4% and Quebec 9.1%. Average rents for shared accommodations decreased by 5% annually in Alberta. And you can read the rest if you want to go into specific cities or look at what's happened in Vancouver. Now, one of the things I just want to touch on really quick, and because it's going to have a dramatic change in the way rentals work going forward. The housing market and rental market, the reason we had swarm of investors come in, do all that they did in the last couple of years in terms of the way the investments worked, the type of opportunities that were available for investments, but also we saw a lot of bad actors enter the market, is because of the immigration policies. So the high amount of temporary foreign workers study permits that we issued in the last couple of years has finally come to a close. As you can see in this article right here, we've seen a plunge of 97% in 2 years as far as the amount of study permits that we were issuing. So it has dramatically dropped. In fact, if you look at the specific numbers for just December 2025, right over here you can see the amount of study permits that were issued is at 2,500. If you just go back to previous December, you can see the amount of study permit holders is at 29,840. So that's the number of new students and workers arriving to Canada is declining, a clear sign of policies that the government has put in place. And so that's about 52% when you compare Jan to November versus the same period in 2024. So that's down 334,000. As far as rents go, you have to take that into consideration because a lot of university cities, for example, Waterloo, or even areas around universities. For example, if you're looking at rental units in Northwest Calgary, right around the university district, that is going to experience a very different dynamic from other parts of the city. And you have to take that into consideration now, because a lot of that is what was driving up the rents too, because there was extremely high amounts of demand. The rental market is always dramatically influenced by immigrants, but also temporary foreign workers and study permits, because those are the people most likely not to buy a property right off the bat, especially if you're on a temporary visa. But even when you come on PR, chances of you buying a property right off the bat on the first year is very low. So all of those people are first direct people to enter the rental market. And that's why that has a dramatic effect. And so if you're looking to enter the rental market, I hope you found all this data and stats extremely useful and get a better context of where the rents are actually changing, how you can position yourself in the market to take advantage of this, but also understand what you could potentially be paying for different rental types. And then should you even consider maybe purchasing a property, paying the same amount, because certain markets have also seen a drop in their purchase prices, especially Ontario and BC. So Vancouver and Ontario have been going through a lot of price corrections. Calgary, I would say less so. However, apartments and townhomes have seen majority of the drop as far as Calgary goes. The detached and duplex segments, not so much. But if your rents are going to be comparable and you're going to be able to take advantage of where the market is at in terms of resale right now, then that is something you should consider. On the other hand, if you're an investor and you'd like a sanity check on making sure you're buying the right property type, your cap rates actually make sense, and what the future projections are for the rents in the area that you are buying, definitely reach out and I'd be happy to provide you that data, have that discussion, and give you that second opinion that might save you thousands and thousands of dollars. Also, as an investor, I'd tell you to be very, very careful of those MLI Select projects. I've seen a lot of bad actors come into the market, charge exorbitant amounts to take over for investors to take over the project, but then promise cap rates that are just not attainable, increase in rents that we are just not seeing, and those numbers don't make sense. I, in fact, saved someone millions of dollars last year just by moving them from one part of the city to another. For those of you who have been on the channel, yes, I'm still working on that economy update video. I've put together all the presentation slides from what we attended in the Calgary Real Estate Board 2026 forecast. And then I'm also doing the segment-based forecast for the resale market. So both of those videos are coming out soon. And if you like videos like this, stats, data, definitely stay tuned, subscribe to this channel, and I would really, really appreciate your support. Thanks again for staying tuned to the end, and I'll see you guys in the next video. Take care.